Disney hasn't been the most popular stock for investors over the past few years, really over the past decade or so, but I think there's actually a much brighter future for the company than a lot of people think. They're entering a transition point with their experiences business, and they have scale that nobody else really has, not only with the kind of assets that they have with all of the Disney IP, but with the number of theme parks and places that they can expand those theme parks through hotels and also experiences all around the world. That's a huge asset for the company, and I think that's really the foundation with which you need to think about Disney today. On top of that, the streaming business is, I think, much more valuable than a lot of people think. Now operating income positive, and ESPN is going to be going over the top later this year. That's going to create a really attractive bundle for a lot of people with ESPN, Disney Plus, and Hulu. So you have a little bit of something for everyone, kind of a cancel-proof product for most families across the US and then starting to be more around the world as well. So I want to go through why I think there's a pretty bright future in these two segments specifically. Yes, there's more to the business. There's the movie business. That's been sort of up and down, but that's historically what we would expect from Disney. But I think these two segments alone are reason enough to be very bullish on Disney at 18 times forward earnings. My name is Travis Hoium. Thanks for watching Asymmetric Investing. Please subscribe here on YouTube for all my content. And thanks to this video sponsor, The Motley Fool. If you go to fool.com/ASYM, they'll give you their top 10 stocks to buy right now. Let's start with the parks business. And I actually want to start, I'm not going to start with the numbers. I'm going to actually start with what they're building, because a couple of years ago, Bob Iger said that they were going to be basically doubling their investment in parks to $60 billion over the next 10 years. Now, when you do that and you increase the amount that you're going to spend, you can't just put shovels in the ground right away. You have to design these experiences. That takes a little while, but we're now starting to see exactly what these are going to look like. And in a video in the recent shareholder meeting, they went through a lot of these things. I'm going to highlight one of these, but I'll just let this video play and just highlight a few of the things that they are building. First of all is the Magic Kingdom expansion with Cars, the Villains themed land, Monsters themed land in Hollywood Studios, Tropical America is getting expansion with an Encanto and Indiana Jones ride, doubling the size of Avengers Campus. Disneyland Paris is getting this ride-through attraction from Lion King, which is going to show up here in just a second. In the cruise line, 6 of those cruise ships are operating today. There are another 7 in development. So just phenomenal expansion opportunities for Disney in these theme parks. And here's a look at the large scale model for this ride that they're going to have based on the Lion King. So this is one of the big things that they showed off. They build these big models before they actually build the physical infrastructure. And there's going to be this ride through right through Pride Rock. So really interesting developments that they have underway. And I think this is going to be a massive business. In 2024, the experiences business had $34 billion in revenue and $9.3 billion in operating income. That isn't going to be a business that's going to double over the next 10 years, even with that $60 billion in investment, but it is going to probably grow significantly. And most of these expansions are just expansions of the infrastructure that already exists today. So I think this is a business that by a decade from now could be doing $15 billion or so in operating income just through revenue increases and price increases, margin expansion, things like that. So I think this is really the foundation for Disney. What isn't getting as much attention is the streaming business. And the streaming business now has over 200 million subscribers when you add ESPN Plus, Hulu, and Disney Plus. So that's the second biggest streaming service outside of YouTube. That's not really quite the same subscription service, but it's behind YouTube and Netflix from a user standpoint and also revenue. But that's a really good position to be in, and ESPN is going to be going over the top. What they said is early this fall, so may expect that in the September timeframe. They've been talking about building that for a couple of years now, and I think that's going to be a big draw for Disney. Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/ASYM for the top 10 stocks to buy right now. Sports is ultimately the big differentiator. Today, ESPN's business is $17.6 billion in revenue, about $2.8 billion in operating income. So that alone is a really good business. But ESPN over the top is going to potentially expand that because you're not going to have the same cable margins being taken out of that. You're going to have more data that you're going to get from customers, potential to bundle with all these other Disney services as well. So in time, I think that the streaming service from Disney could be bigger and more profitable than Netflix. Yes, than Netflix, because this is the one sports product that you're going to have if you are a sports fan. Just the ESPN properties has NFL, NBA, a lot of college football content, and I think over the next few months, we'll actually see them signing some deals with some other content providers. I think the one that makes the most sense is Fox. Fox is a company that has a lot of sports rights, but doesn't have its own streaming service. So how are they going to get their product into a streaming service and reach the most people, attract the most revenue that they possibly can? There's only a few options. I don't think Netflix really makes a lot of sense. Disney is going to be number 2 in the number of subscribers. Obviously, they're making this huge investment in ESPN, all going over the top. And what are your other choices? Max, that's kind of a floundering service. They weren't able to renew the NBA. So that's not going to be a sports product that has a lot of value. Peacock, I think, falls in kind of the same boat, kind of a niche product, niche sports, but they don't have the scale that Disney does. So when we look at sports in the future, who is going to be able to have the most sports, the most eventized sports? It's going to be ESPN and Disney. And I think that's going to be the differentiator for their streaming service. That's what's going to ultimately drive the streaming platform to new heights, and it's going to start later in 2025. I think there's going to be a lot of surprises about how big that impact is, and that's going to come a lot sooner than you think. So today, like I said, shares are trading for about 18 times earnings. Management's done a really good job lowering their operating costs. Their movies have gotten a little bit better. That's put a little bit of momentum behind the streaming services, Disney Plus in particular. Hulu is performing well. And I think the bundling of all of these services, once ESPN goes over the top, is just going to be a must-have for millions of subscribers. I'm not going to be surprised if ESPN alone has over 50 million subscribers, maybe even by the end of this year. So we'll see how these things play out. But I think you look at all of these tailwinds behind Disney, really good value for investors, and the company's much better position than the media would let you think. Who has it better when it comes to parks and when it comes to streaming sports? Disney is the clear leader there. I think that lead is going to extend. And once they solidify that number 1 position, they're going to be able to buy more sports. They're going to be able to buy more sports rights and continue this flywheel effect in both of these segments. I think the best days are actually ahead for Disney. A few rocky years over the past few years, but they seem to be at least on the right track. The big wild card is who's going to be the next CEO. We don't know who that's going to be quite yet, but that uncertainty has allowed for a good buying opportunity for investors. But let me know what you think about Disney stock today. Leave your comments in the comments section below. Don't forget to subscribe to Asymmetric Investing. Thanks for watching, everybody. See you here next time.